Hey guys, Kill Stokes here with Tier1Trading.com. I got 4 really cool trading setups to take a look at this week, as well as an update on the DKC strategy. We're going to kick off things on the dollar-yen daily this week, and you can see some of the notes still on the chart from this past week in the live room. And this was a pair we were looking at a bearish bat pattern on. We came ever so close. The completion of that bat pattern would have been right here at our 886. You can see price came right before it and then worked its way back down. So it doesn't look like that's going to happen, which is a bummer because it looked like it put in a pretty decent move. But we can't worry about the past. The past is the past. Let's talk about what to expect or what to put on our radar for the future. And I'm going to go down to the 4-hour and eventually the hourly time frame here. And what I'm looking for is a continuation lower. I'll delete some of we'll actually keep this on because we'll need it. I'll just explain what it is. Well, no, I'll delete it and bring it back on. Right? I'm sorry, guys. This is not rehearsed. I kind of do this just loading up the charts and talking to you. But what I'm looking for is a continuation lower. We look at the movement that price put in, right? Specifically kind of our move up here, and then we came back and found this little structure shelf a few times here, right? And then what we did was we broke and closed below this level, and we're currently trading at this little sneaky level right here, which is another structure shelf, right? A shelf of structure support. What I'm looking for is, or the question I'm asking myself, I guess, is if we can break and violate this level, where are we likely to go next? And the next stopping point is going to be this little retracement right in here. Now, the question that I have within this level is, if we're going to retrace to this point, are we most likely to go to the top of it, or are we most likely to go to the bottom of it? And this is where I want to use my technical clues, right? How we teach technical analysis here, specifically with target taking, is we start off with zones, right? We identify zones, whether it be on higher time frames or lower time frames, and then through our analysis, right, we use our tools to kind of pinpoint the area in which we think is the best location within those zones. And that's for target taking. That's also for stop losses. That's also for taking trades as well. So a few tools that I want to use here is, one, my Fibonacci retracement tool. I'm going to drag that from my swing low to my swing high right up here. You'll see there's a 50% Fibonacci retracement in there. Again, 50 is not a fib number, but it is a psychological number, which is why I have it on the tool here. We can also take a Fibonacci extension from, let's see what happens if we take a Fibonacci extension from our most recent swing high to swing low right here and back down, back up, I should say. Sorry about that. Looks like we're gonna have a 127 a little bit above, a 1618 a little bit below. Let's take one more from our previous move, see if we can get some confluence. And again, this is all part of the process, guys. This is not random. Same thing. So we have a 1618 at the bottom of our zone right here. So we have two 1618s at the bottom of our zone. We've got a 127 in the middle of our, or top of our zone, excuse me, and a 50% in the middle. Now, something else we have in the middle of our zone here as well is going to be a psychological number, the 141 even handle. So just as 50% is a psychological number, so is 141 even. What we mean by psychological number is that they are numbers that humans like, right? We enjoy things that are easily divisible, right? So 0 zeros, 2 5s, 5 zeros, 75s, right? The simple stuff, right? If you notice, and you might have done this as well, do me a favor, type this in the comment section below if you have. As a newer trader, have you ever only like put stops or placed orders at, or targets at psychological levels? Meaning you're in a trade and you're like, I'm going to take it off at 143 even, and you have no reason for taking it off there, but it sounds good because we're ingrained to kind of pay attention to those round numbers. So if we're ingrained, so are a lot of other traders out there as well, which makes these levels act pretty importantly. Last thing I want to do is I want to put in my fixed volume. I'm using a different one right now. They TradingView just did a little bit of an update, and they gave me a new fixed volume tool. This is going to be our anchored profile. You've seen me in the past use the fixed volume profile where I'm drawing it from swing to swing. This is going to be the same thing. It just makes it easier because it draws it for me on the right hand side. And what I want to look for is I want to look for increases in volume level. I use this the same way as I use support and resistance. And you can see that we have an increase of volume really right as we get to that 141 even level. So the 141 looks like a pretty decent level to shoot for. I'll erase the chart and just put that on as our targets. Now, what we need in order to get short first is a violation. So we're kind of working backwards here. So if price action can violate these lows, right, put in a failed double bottom essentially, then we would expect price action to come down to this level. Now it's up to you as a trader how you want to get there. You could be a breakout trader and trade the breakout straight from 141.50s down to 141 evens, or you can wait for the breakout and the retest and look to catch the pullback down there as well. That's up to you. Can't help you with that. But what I can help you with is this potential bearish continuation idea on the dollar yen. Next up is going to be the Aussie Canada, once again starting on the daily. This is one of my favorite pairs for advanced pattern formation trading or harmonic pattern trading because it's like a shinier version of the euro pound. If you guys ever looked at the euro pound, I call that the molasses pair. It's really slow. It's really consolidative. It doesn't really do much. It's not a bad pair at all. It's just very slow and boring. Aussie Canada is very similar as it loves to consolidate. However, it gives a lot more opportunity than the euro pound, and specifically in harmonic and advanced pattern formations because, well, those type of patterns tend to form within consolidation. So we're looking at the Aussie Canada right here, and a level stands out for me, right? This big spike right here, and it stands out for me because we've seen this a few times in the past, right? You see this big spike right here, and you see this big spike right here in the past. These are two levels of rejection. So price action pushed down, tried to push up and got massively beat down, right? And then price action came back here more recently, did it again, tried to spike up and got massively beat down. If price were to retest that level again, right, I would expect a similar reaction. Again, I maybe expect is the wrong word, but it wouldn't surprise me if we got a similar reaction. We did a podcast this weekend talking about the U.S. credit rating downgrade, and we talked about how you can use backtesting from a fundamental perspective as well. And it's just like, backtesting, whether technical or fundamental, the idea, or not even backtesting, just looking back through historical data, I should say, whether it's technical or fundamental, what we're doing is we're looking for clues in the market. And we're trying to see how did the market react at certain levels, because as humans, we tend to repeat ourselves, right? We're pretty predictable. If it did this a certain time, odds are there's a good chance of it, or a greater chance of it doing it again. So when I see stuff like this, these are big clues that stand out and say, hey, if we were to get back down to this level, pay attention, pay attention, pay attention. Now, if we go down to a lower time frame here to 4 hour, we're going to have an advanced pattern setting up, right? We're going to have a potential cipher pattern setting up. And our cipher pattern is a little bit different than the other patterns we typically talk about. Our bats and our gartleys, they tend to be, even our butterflies and our crabs and sharks, they tend to be called M and W patterns, where they complete like the letter W, right, for a bearish one, or the letter M for a bullish one. Cipher patterns look more like an ABCD type of pattern. So we have our initial leg that goes down here. We have a retracement, just like the start of a bat, gartley, crab, shark, whatever. Then we have an extension, which is different. And this extension violates or invalidates a bat, invalidates a gartley, because we violate the C leg. What we're then looking for is an overcorrection in the opposite direction. And this is very similar to what we see for a butterfly pattern. So we have a overcorrection in the opposite direction. So price rallies up. We violate structure right here. So it's a little bit of a breakout, and it kind of goes against our rules as far as like technical analysis goes. But what we're looking for is exhaustion. We're looking for again, a very large move from down here all the way to up here. And we're looking for some profit taking. We're looking for the slowing down in buying interest and the pickup or the uptick in selling interest. And remember that selling interest comes from two different places. Selling interest does come from newer sellers looking to enter the market. So sellers that are interested in the level that I shared with you before, right? They're looking to sell, because we saw those rejections before. But also previous buyers that bought down here, guess what? You did all this buying at a very good location. You want to make some money, right? So in order to cash out of your buy position, what do you have to do? You have to sell, 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 sell. So we see a little bit of relief in the market due to that shift from buying to selling pressure. But this is, sorry, I forgot to actually draw it on for you. This is going to be a cipher pattern. It looks like this is a potential cipher pattern, excuse me. X to A to B, B to C. And then a CD completion would technically complete right here at our 786 Fibonacci retracement, but the completion zone, because everything works in zones, the zone would be this entire area between the 786 and the X leg for potential sells here on the Aussie Canada. So let's take a quick break to do some shameless promotion. In case you missed it, I released 3 brand new episodes of the Trading Coach podcast this week, starting off talking about prop firm challenge hacks, how to kind of think about your prop firm trading future and put yourself in position to make the most out of your investment. We then talked about a prop firm that is kind of entangled in a big scam, a Ponzi scheme, and what you need to know and what you should consider doing about it. Lastly, we talked about the US credit rating downgrade and how, although the markets are fearing it right now, how this may unlock an amazing investment opportunity. So check it out, the Trading Coach podcast, 3 new episodes each week, available on your favorite podcasting app. Make sure you like, follow, and subscribe. Now heading over to the Euro Aussie, starting on a daily time frame as usual. This is one we tracked in the room all week, and you can see we finally got to the upper end of our previous level of structure resistance. By the way, for you guys that are training your eyes, this was also a cipher pattern in the past as well. Let me just drag this on for you. I never know where my tools are at, but this was an X to A to B, so a good example of that, B to C, a C to D, which completed right at this little spike right here. You can see actually came down to hit target 1s, which were at the 382. Did not hit target 2s, but at least you got a little something out of it. This is going to be a secondary opportunity as a sell as we test our previous level of structure resistance and we look for opportunities to get short. Now, going down to a lower time frame, 4 hour, you're going to see that we have a double top. So a double top is a classic and simple pattern formation where price action heads up, we then retrace, and then we retest and have a failure to break this level. So it's price action testing the same level twice and holding, or well, we would expect a hold twice. If you want to add some confluence to this double top, we have a few things that are setting up, right? We're going to have our RSI, which is my indicator of choosing. You can use whatever indicator you want. RSI overbought on the first touch. On the second touch, you can see we have clear RSI diversion. So equal highs, but lower, much lower highs here on the RSI. And that's going to be another clue that price action may be ready to put in a short. So the next question is, okay, targets, right? This is a valid, let me double check. Yep, valid double top at market. So this is something that you can enter if you choose on the opening of the market. Now the question is, if we go down, where are we likely to go down to? And again, this is where we can bring in a few tools. I can bring in my Fibonacci retracement from my swing low to swing high. Long weekend just started. It's already long. I got 2 kids. My wife is out of town, so I'm on solo dad duty, and they've already burnt me out. But Fibonacci retracement from swing low to swing high, right there, you're going to see a 382 Fibonacci retracement come right in at our previous levels of structure. I'll draw a line out here. You can see previous structure looking left. It's a little bit below that. And then again, we have our volume tool looking at where is the highest level of volume. Where are the voids? The voids are areas that we expect price action to kind of easily plow through when the volume starts to pick up. So when the lines on the right-hand side of your chart get more toward the left, larger, I guess you could say those are the levels we want to pay more attention to. And you can see we have our 3D2 right here, but we don't really have the volume pick up until we get to our 50% retracement. And again, we can line it up with, a psychological number, 165.50. So for you guys that are maybe new to my journey, I'll give you kind of the quick version. I think there's a podcast episode of this as well. If there is, I'll shoot it up on the chart in post-production. But I hated volume. I was fully against volume. Never trusted volume in the Forex market. No central market. So volume, the number of volume is irrelevant, right? About, I guess 2 years ago now, I did another deep dive in the volume. And I ended up finding a way that it could be useful in trading. So growth mindset, changing my opinion. And that comes with just, being less stubborn as a trader, but also being more knowledgeable as a trader as well, and figuring out different ways to use things. Now, I started off by really researching your traditional volume, your bottom of the chart volume, which I didn't find to be very useful in my particular trading style due to the kind of the 24-hour nature of the Forex market, right? So there's going to be these natural ebbs and flows that are not specific to trading volume, but just specific to your trading period. What I did find out of that was that this fixed volume was something that really meshed well with my trading, because the backbone of my trading is support and resistance structure. This volume acts as basically the same thing. And what it does is it gives me little clues that just help me get a little bit better with pinpointing my target and my entries. So if I can get a little bit, and I did a short on this the other day, if I think it's on like wins and losses, whatever like that, but my goal as a trader is to do one of three things. There's three parts of our edge, right? There's win percentage, there's average win, there's average loss. I want to either increase my win percentage, which comes with just better recognition, maybe better entries, maybe adding a filter. I want to decrease my average loss, which means becoming better with stop losses, identifying when I'm wrong and making sure I get out when I'm wrong, and then increasing my targets, my average profit. So meaning that when I win, trying to get the most out of the trade. And stuff like this volume has allowed me to increase that a little bit. So in the past, where a target of mine would be right up here at structure, because I'm a scaredy cat and I don't want to, mess with structure, understanding that, hey, volume leaves clues, this may be the difference between me adjusting a target from there to maybe down here at the 50%. And again, it may not seem a lot, but if you look at this trade right here, that's the difference of, what are we right here, 382? That's the difference of about 50 pips, right? So you think about an increase of your average win, or just maybe even your win percentage by having it at a safer position. Those small changes over time can make massive differences in your trading, trust me. Next, we're going to head over to the NASDAQ. We got another advanced pattern formation setting up. Not going to redraw it, but it's here on your chart. This is a bearish back pattern. Last time we visited the NASDAQ, we had a nice little ascending triangle. My favorite pattern to trade. I love it. Is my absolute favorite, the best, right? Which worked out pretty well, as you can see. Now we're starting to retrace back into that level, and we have a potential back pattern, which would give us a nice buy here at the decompletion. Now, what we need to do is, right, we need to break our current structure shelf right here. If we can break that current structure shelf, we're likely to travel down to this area. That number is a little bit off, so let me just draw in my Fibonacci level right here to give you a true read. But you guys should be doing this on your own, right? You shouldn't just be looking at this video and taking trading opportunities. These are educational videos only, but always marking up your charts yourself. But if we can violate this level, very similar to the dollar yen, the expectation is that we'll dive down to this 886, which offers two trading opportunities. One would be buying the bullish bat. Two would be, again, a continuation trade in advance of that level. Before you go, make sure you hit that like button, leave any comments if you have them below. I want to give you guys a quick update on the DKC. It's been about, 2-3 weeks since I did an update for you. So I'll kind of put it together, week 16 through 18. Volume's been pretty slow. So it's the dog days of summer, you would expect it, but 20 trades, win percentage higher than expected at 45. Again, our expectation is about a 35% win percentage, and totals of about 7.3% over the last few weeks. That brings our annual total to about 23% in the black, which is a pretty good comeback. If you guys have been watching this or tracking this throughout the year, remember it started off good, week number 1, and then we kind of went downhill for a while now. You can see on the chart in front of you, we were basically in the red for about from week 2 all the way to about week 9. Then we came back up, took a breath, and then came back down to break even. And then we just slowly churned our way back up. And for you guys that are on the platform, we did the Q&A on this. We talked about the pros and cons of this. It's a very streaky strategy. It's a very streaky strategy with big win streaks and big losing streaks, and that's it's not something that I personally enjoy, but it does end up being profitable. So in my mind, I'm still trying to weigh the balance of, is this something I'd like to continue with, or is it not worth the pain? But I like tracking the journey. I know you guys like seeing it. So it's on a heater right now. I would expect some type of decline, but a 23% return in 4 months is pretty decent. It's 5% a month, and that's, again, really the top of the line of what I would expect from myself in the market. And of course, that's with a single strategy. If you add that to the portfolio of other strategies, it's so far been a nice little addition to the trading portfolio. Little fun money, right? So before you go, hit that like button, subscribe if you're new, and make sure you hit that notification bell, as I do a lot of midweek videos, so you don't want to miss those. Also, if you're looking to learn how to trade, whether you are a brand new trader or someone that's been doing this for a while but kind of stuck at a certain obstacle and can't really figure it out, check out www.tier1trading.com. That's where we coach and educate traders. There's a 14-day risk-free trial membership that you can check out. Gives you access to some training courses, gives you access to our live sessions, and gives you access to our great community of traders. The 14-day risk-free trial membership is just what it sounds like. It's risk-free, so there's no auto bill or anything like that. You don't get kind of suckered into a subscription. You just lose access to the site. So www.tier1trading.com. I'll see you guys with the next episode of the Trading Coach Podcast, due out Sunday night / Monday morning. And I'll see you guys whatever midweek video I put out. All right, until next time, plan your trade, trade your plan. Take care.